Lewis, the Global Strategist Capital Markets Group at Manulife Asset Management, and Peng, Asia Pacific Investment Strategist at Citi Private Bank, are joining in to tell us how we have to read this as equity market observers. Good morning to both of you, gentlemen. Ken, if I could come to you first. First, the Comey testimony. How do you think it could impact markets in future? Will it change the way you invest at all? Will you believe that Trump reforms are postponed?
Actually, I don't think this particular testimony really made any new news. A lot of the information were already in the public domain, so this is not much of a shocker at all. In fact, the fact that we have a special investigation going on by the FBI under Mueller, that actually removes some of the burden from Congress to investigate this thing, and I actually think that's good because it could help to help Congress to refocus on things that really matter. So I think the expectation for Trump policies such as tax cuts, repatriation, and other infrastructure have fallen off so much that I feel that now might actually be a good time to be looking at it again. Now, I don't see a major catalyst in either way. Really soon, but these things, politics can change pretty quickly without notice. Yeah? So yeah.
Okay. Ken, does it really matter to a country like India whether it's the Conservative Party in power in UK or the Labour Party, or what happens with respect to the political developments there? Is there any change to the Brexit timeline? How does what happens in the UK affect India, if at all?
I think the impact for India would be very, very minimal. You'll hardly notice anything. I think for the UK, this is problematic because it increases political uncertainty. And for Europe, I think this is probably the bigger implication for the rest of the world, is that the EU is going to have a much stronger negotiating position with the UK regarding Brexit, and this is going to send a message to the other populist politicians elsewhere in Europe who might be thinking about exit themselves. So I think this is a very positive development for the durability of the euro and the European Union.
Well, I'm just coming back to you in a minute, Ken. Let's get Geoff Lewis as well into it. Geoff, two big events, the Comey testimony, which, as Ken said, and all of us who heard it thought, didn't say anything new. As well, hung Parliament in UK. As an investor in emerging markets, does any of this change the way you invest?
No, I don't think so. The UK is not systemically important to the global economy, and UK politics is fairly parochial. A lot of it was decided on local issues like National Health Service and immigration and so on. It does strengthen the EU's hand when it comes to Brexit negotiations, I think so. We have no idea at the moment who the next UK government is going to be. If the Conservatives has a very narrow majority, possibly the grandees on the 1922 committee will push Theresa May out. So there's still a lot of uncertainty there, but I think it has... well, certainly it doesn't make emerging markets less attractive, these problems, political problems in the developed markets, shall we say. Okay. Looking at the achievements of the Modi government, they're beginning to sort of show a very good track record, whereas European politics is just in a terrible muddle. So the economy's doing well in spite of the politicians.
You may put even more money into India, you're saying?
Well, as the previous commentator said, this isn't a big deal. It doesn't really change the economic outlook or the political outlook for the emerging markets in the U.S. The Comey testimony was never going to be a smoking gun. I think we'll have to wait for Robert Mueller. But at the margin, it certainly doesn't detract from the case for being overweight emerging markets. In spite of the strong returns in the first half or year to date, probably markets will consolidate. But the longer-term case, after being out of favor for so long, after making a good long-term technical base and what looks like the start of a new earnings upcycle, then on 12, 18-month view, one should be still positive towards emerging markets.
Okay, positive towards emerging markets. Are high valuations in India a concern at all for you or even the other investors that you speak to?
Yes, I think they have to be a bit of a concern. Obviously, India appears to deserve something of a premium in terms of valuation. Valuations optically are a bit worse because we've seen earnings growth for calendar 2017 revised down by 5%, which was presumably demonetization. And the numbers for 2018 haven't really been revised up an awful lot. So this is the time after 3 years of earnings disappointment when you've got to show me the money, I think. Otherwise, some foreign institutional investors in 2018 might start to look elsewhere.
Yeah, we too have been waiting for that earnings uptick. Ken, before I come to your view of India, just one more word on the global events. Do the events in Britain, as even Geoff was explaining, give a bigger leg to globalization? When Macron's win did that, what was until then looking like a Fitzperius or a falling apart of Europe got reversed with the French election. Now perhaps the Fitzperius tendencies are even less. Will that all change the way people invest?
Look, I think even before all this political stuff is happening, we saw a rebound in global trade. That's continuing, even to this day. I think in May, Asian exports in general is on pace to clock about 10% growth. That's not bad. And so what these political events was threatening is globalization, and I think that's going away. So whatever progress we had in global trade activity, we get to keep. Right, so I think that's on the margin a positive, but these things were already happening. The cyclical recovery was already underway. So I wouldn't say that this adds a lot more to it.
Well, finally a question on India. The same as we were asking Geoff, are the valuations daunting, or do you think that growth is round the corner to justify this liquidity?
So the trouble I have a little bit is, each time we're expecting a lot more growth in earnings out of India, and the delivery has been challenging. So I think now with so much reforms in place, for this year at least, I think growth is going to be fairly volatile, right? Because of GST, because of monetization, it's going to be fairly volatile. So the optics might not look as straight up as it should be. So I think it takes a bit more faith, I guess, to stay invested. I think investors are worried about valuations, but me personally, I think the longer term prospects are so positive that it deserves deserves more faith.
All right, Ken Peng and Geoff Lewis, thank you very much for joining.